While the S&P 500 keeps breaking records, something strange is happening behind the scenes. Warren Buffett, one of the most legendary investors of all time, isn't cheering with the crowd. He's not buying more stocks. In fact, he's selling. Quietly, carefully, and consistently. So why is Warren Buffett selling stocks while the S&P 500 is going up and up? What does he see that others don't? And more importantly, what should that tell us about the market? And what might be coming next? Let's take a step back. Over the past year, the stock market has been on a tear. Headlines talk about record highs, AI booms, tech stocks soaring, and a wave of optimism flooding Wall Street. Everyone seems to be bullish. The mood is electric. But Warren Buffett is doing the opposite. Instead of jumping on the hype train, he's trimming positions, even in stocks he's held for years. Apple, for example, one of his most beloved holdings, has been quietly reduced in Berkshire Hathaway's portfolio. The same goes for Chevron. And this week, new filings show he dumped even more shares in another major company. He's not saying much about it. No flashy interviews, no bold predictions, just cold, calculated selling. It raises a big question. What does he know? Buffett has always believed in value, not hype, not fads, but solid fundamental value. When the market gets too excited, when prices run ahead of profits, when people forget that stocks represent real businesses, that's when Buffett starts getting cautious. He's done this before. Back in the late 1990s, during the dot-com bubble, everyone was rushing into tech stocks. Prices were skyrocketing, and it felt like the market would never crash. But Buffett didn't bite. He was mocked at the time. People said he was out of touch, but then the bubble popped, and he came out looking like a genius. Could we be in a similar situation now? Let's look at the S&P 500. Yes, it's up, but it's being driven by just a handful of companies. The so-called Magnificent Seven, giants like Apple, Microsoft, Nvidia, Google, Amazon, Meta, and Tesla, are responsible for most of the gains. Strip those out, and the broader market doesn't look nearly as strong. That's not a healthy sign. Buffett might be looking at that and seeing concentration risk. When just a few stocks are doing all the heavy lifting, it suggests the rally isn't as strong or stable as it looks. Another thing Buffett watches closely: interest rates. For years, rates were near zero. That pushed people into stocks, because bonds and savings accounts weren't paying anything. But now, rates have risen sharply. That changes everything. Suddenly, investors have alternatives. They can earn 5% in a money market fund, risk-free. That puts pressure on stock prices, especially for growth companies that rely on cheap borrowing to expand. Buffett knows this, and he also knows that high rates don't just impact company valuations. They hit consumers too. Higher mortgage rates mean fewer home sales. Higher credit card rates mean less spending. And when consumers pull back, businesses feel it. So what is Buffett doing instead? He's hoarding cash. Berkshire Hathaway is now sitting on over $150 billion in cash, the largest pile in the company's history. That's not by accident. It's not a fluke. It's a strategy. Holding that much cash means Buffett is waiting, watching, being patient. He's known for saying, "Be fearful when others are greedy, and greedy when others are fearful." Right now, others are clearly being greedy. Buffett? He's preparing for the fearful part. Now, some people might say, isn't he missing out? The market is up, AI stocks are booming, why not ride the wave? But Buffett doesn't chase. He never has. He waits for the pitch he likes. And when things get crazy, he steps back. That's why he's lasted this long. That's why he's beaten the market decade after decade. Think about it. If you were driving and suddenly noticed all the other cars speeding like crazy, weaving in and out, would you speed up too? Or would you slow down, watch more carefully, and prepare for a possible crash ahead? That's Buffett right now. He's not panicking. He's just cautious. And history has shown that when he gets cautious, It pays to pay attention. But what can we learn from this? What should we, as everyday investors or even just curious observers, take from Buffett's recent moves? First, this is a time to be thoughtful. It's easy to get swept up in market euphoria. Social media is full of people boasting about stock wins, YouTube videos promising 10x returns in weeks. It feels like everyone is getting rich, fast. But that's usually when risk is highest. That's when mistakes happen. Buffett's actions remind us to stick to fundamentals. Look for value. Avoid chasing trends. Be okay with holding cash if there are no good deals. And above all, be patient. Second, pay attention to the broader economy. Rising interest rates don't just make borrowing harder. They slow everything down. That doesn't mean a crash is coming tomorrow, but it does mean we should expect more volatility, more surprises, and probably more opportunities for those who are prepared. Third, realize that even great companies aren't always great investments. At every price, Buffett might still love Apple as a business, but if he thinks the stock is too expensive, he'll sell. That's not emotional, that's rational. We can do the same. You can admire a company, but that doesn't mean you need to own its stock at any price. That's where discipline comes in. Here's a perspective that's easy to overlook. Sometimes the best move in investing is doing nothing. Buffett's cash pile isn't laziness. It's patience. It's about waiting for better opportunities. And they always come. The markets move in cycles. Booms are followed by busts, and busts bring bargains. One more thing Buffett teaches us: don't follow the crowd blindly. Just because everyone is doing something doesn't mean it's right. Buffett's entire career is proof that independent thinking works. He often acts against the tide, and that's when he finds his biggest wins. We live in a time when information spreads fast. News, trends, hot stocks, it all moves in seconds. But wisdom takes time, and Buffett has plenty of it. Now here's something else to think about. What happens if Buffett is right? What if we do see a market correction, or even just a slowdown? Well, then Buffett will have something few others do. Cash, ready to deploy. He'll be able to scoop up bargains when everyone else is panicking. That's how he made some of his biggest wins, during crashes, not booms. He bought American Express after a massive scandal. He invested in Coca-Cola after a crash. He helped rescue Goldman Sachs during the 2008 financial crisis and made billions. That's the playbook. Wait, watch, prepare, then act decisively when the time is right. So let's bring it all together. The S&P 500 is flying high. People are excited. But Warren Buffett is selling. He's trimming his biggest holdings, he's building cash, he's being cautious. That doesn't mean you should panic, but it does mean you should pay attention. Because when Buffett moves, he moves with purpose. And history has shown, more often than not, he's right. So maybe the smartest thing we can do right now isn't to follow the crowd. It's to follow Buffett. Be cautious, be patient, be ready. And remember, when the storm hits, it's the prepared who thrive. And while Buffett may be sitting on the sidelines for now, don't think he's out of the game. He's just waiting for the moment when others flinch, and then he'll strike. That's when real wealth is built. Not in the highs of euphoria, but in the lows of fear. In the end, investing isn't just about money. It's about mindset. And Warren Buffett's mindset, calm, rational, long-term, is something we can all learn from. So the next time the market makes headlines, take a step back and ask, what would Buffett do? Because in a world full of noise, he's a quiet voice of reason. And sometimes, that's exactly what we need. And here's a final note to keep in mind. Warren Buffett has often emphasized the value of simplicity. While the world chases complexity and speculation, Buffett sticks to what he understands. Whether it's insurance, railroads, or soft drinks, he invests in businesses that make sense. That might sound boring, but boring works, especially in chaotic times. Buffett's message, if there is one, seems clear. Focus on what's real. Understand what you own. Don't overreact to the headlines. And never underestimate the power of staying calm when everyone else is losing their heads. If you're an investor, a student of the market, or just someone trying to make sense of it all, take a page from Buffett's book. The secret isn't in chasing the next big thing. It's in standing firm when the ground starts to shake. And above all, it's in knowing when to act and when to wait. So as we watch the market continue to shift, let's keep our eyes on the quiet giant in Omaha. He may not say much, but when he acts, the world listens. And often, it learns.